part 2 as to how to use the Fibonacci tool. Now, we saw yesterday when essentially the CPI data came in at 130, we saw the GBP USD broke out of this range, okay, and it essentially took out all of this orders as well. Okay, now obviously we are reactive traders, so what did we do? Now after 130 we saw that the price was essentially ranging around this level, okay, and the bulk of the data was basically at 7 o'clock. Now, so what was my idea at 7 o'clock? Okay, essentially the data came not as dovish as expected. So after the pair was basically consolidating for the last basically 4 hours, we saw that the range of this level was basically broken out. Okay, and what does that mean? It means that essentially all of this was gonna get filled up, okay, because essentially the data was not as dovish as expected. So we're not going to see as many cuts as what the public was expecting actually. Okay, so for that reason we saw that everything against the dollar essentially fell. Okay, so when the data came out, I saw this big spike in GBP USD, okay, and this meant that, okay, the sellers are essentially loading. So what this consolidation meant was that essentially people were loading up for orders, okay, so that they can essentially take out all these buyers. And why was I looking for sells? Okay, so if we go on a longer time frame, let's say we go on a 4-hour time frame, okay, realistically there's not that many orders above this. Okay, so even if I go on a daily time frame, the next sets of order would be only this level here. Okay, so I'm gonna highlight this. This is basically a daily time frame. Now, only this much orders was available for us, for the buyers to essentially get taken out. And bear in mind, this is a sell candle. Okay, so that means there were sellers there. So that's essentially where the most of the volume was expected to be. So it's ludicrous to think that when the US dollar is that bullish, to think that GBP USD is going to break the level of 1.2890. Okay, so if we go back to our lower time frame, okay, and remember guys, when we see consolidation, what does that mean? It means that there are orders in both sides. Okay, but because there aren't that many orders above, because obviously there's so much orders below this, okay, like this is a level of consolidation. Okay, and what else did I teach you as well yesterday? That when there is a buy side sweep, okay, so you can imagine that this is a buy side sweep. Now you can expect also a sell side sweep. And what does that mean? It means that essentially the orders above this range got taken out. So let me show you guys. Okay, so now the logic is that the orders below this range have to be taken out. And something else that I haven't also taught you yesterday, because I was expecting for this to happen, is that this is the 50% level of the Fibonacci of essentially, well, actually let me show you guys like this. Okay, so this is the 50% Fibonacci of the previous range. So what does that mean? Once any sweep has happened, be it a buy side or sell side, the price has to balance out, because that means that there's too many buyers. Well, somebody has to sell in order for these buyers to cash out. So this is a relationship with the buyers and sellers. If someone is buying, well, for you to be able to close your trade, someone has to either purchase or sell your order. Okay, so what does that mean? All these buyers essentially now have basically unloaded all their positions above this area, okay, because this was the daily area. Well, you can't see it because it's so far away, but let me write it for you anyway. This is where buyers sold the positions to the sellers, okay. And why is that a logical place? Because that's above all the liquidity as well. So as you can see, there were so many orders here as well. Okay, so now whenever there's consolidation, you need to imagine that essentially orders are getting loaded. Now your job as a trader is to understand which direction these orders are gonna go. And the logical thing to expect is that, well, it went up so high, it took all the orders above this and this. Well, now obviously for the buyers to close out the positions, the sellers have to buy their positions. Okay, so now I can expect the price to actually reach this level here, guys. So 1.2728. Now obviously this is more of like a long-term trade, but I'm more like a day trader, so that's for the reason as to why I didn't hold my trade. But let me explain to you the logic behind my trade. Okay, so all of this was premeditated before I even entered the trade, guys. Okay, so what I would like you to think is that all of this work, whatever I drew on the chart, is something that I need. It's not just for the sake of it. Okay, because you need to keep your chart clean and understand the logic of what the market is doing. Which area is it? Is the market into a consolidation? Has the smart sellers entered, or has the smart buyers entered? Has the market swept buy side or sell side? Once I saw that it swept buy side, now I can expect to either go to the 50%, or even further, it can just go all the way down, like all the way here. Okay, so that was my logic behind the trade. So I was looking for sells, I was not looking for buys. Okay, and the reason also because the data came more hawkish than usual. So I had a lot of confluences in my side for me to take this trade. Okay, I didn't have just one confirmation. I didn't just look at the market and it went up and that's why I'm selling. No, it doesn't work that way, because if that was the case, then everyone would be a millionaire. So once I saw that this was essentially created, it broke the structure over here. And I saw that essentially the market was taking a long time to take more orders. So that's a good thing, actually, because if the market just moves up and down, well, you don't have time to essentially think about what's actually happening. Okay, so as you can see, 7 o'clock, that was my first cue. Once I saw the news coming in, and that's when I saw this bullish candle right here in the 1 minute. Let me show you guys. Once I saw that this was not breaking, once I saw this wicks and I saw that this level was not breaking, well, that was my cue that, okay, I can sell. And once I sold, I went for a 1-to-2 risk to reward ratio trade. Okay, and it did take some time for actually to materialize. So what happened was around 7:15, I think 7:11, that's when I entered my trade. Yes, 7:11, that's when I actually entered my trade. And then what happened was I just left it. I just left it overnight. Okay, and this morning when I woke up, I actually saw my trade being around here. Okay, it was 1.2785 and it was London session. And I was like, okay, you know what? I'm not too sure what's going to happen today. But in retrospect, obviously, I should have held it because I had all the confirmations for my trade to actually hit TP. But I just thought, okay, you know what? Because usually I don't trade London session. And I saw my trade being in profit during London session. Okay, so that's why I was like, let me just cash out. Let me just make my take my profits and just be happy. Okay, but overall, I do believe that it's going to go back to the 50% of the previous range. So whenever a range is broken, you need to think that, okay, what's going to happen? Either the price is going to keep going up, but if there's no available liquidity, then obviously it has to come back down. Okay, and liquidity means orders. Okay, look, there's literally no chart here, so that's what it means. Okay, so now the logic is either it's going to go back to the 50%, or if we have a lot of volume, it's going to sweep all the way down. Okay, so but my logic is that it's probably going to come back down to the 50%, and after that the market is going to do whatever it's going to do. Okay, and the reason why I had this trade actually was because I also had a USD JPY trade. Okay, and this was very, very sad. So let me show you guys what happened. Okay, but that's the reality of trading. Okay, I actually hit a sell on this trade. I'm going to show it to you on your screen. So the logic was that when the news came out, essentially once I saw that they were more hawkish than normal, I was like, okay, I'm only going to look for buys. Okay, and another reason as to why I was looking for buys is because this range was broken. Okay, and it's the same logic as GBP USD. Okay guys, so it's very simple. This was in a range, so that means, okay, I saw that a CPI 130, the price fell down and it came back to the 50% of the previous range. Okay, so this was already a range that I marked out on the first week of June, okay, which I actually had very good trades over here. So the market repeats itself. It's all a cycle of consolidation, buy side sweeps, sell side sweeps, and it's going to retrace back to the 50%. So as you can see, this is a 50% of the previous range. And once this range broke out on CPI 130 yesterday, it went back down to the 50% and it just stopped. So you need to ask yourself, why did the price stop there? Why didn't it keep going down? Why? Because the price has to balance out. Okay, once the price balances out, then the whole cycle starts again. Okay, guys, so let me show you. You can consider this as being a consolidation. Okay, so if this is a consolidation, what can you expect? You can expect that a buy side sweep or sell side sweep has to happen. Okay, and all of this, you can consider this as a buy side sweep. Okay, so let me show you my entry. Okay, once I saw that this consolidation was essentially broken out, a massive fair value gap was essentially created. But my mistake was that I entered too early. I didn't wait for the fair value gap to get retested. If I waited for the fair value gap to get retested, I actually would have made a lot more than I did yesterday. Okay, so I only made 1 R instead of making 4. Okay, and that's my fault. You know, you cannot blame the market, you cannot blame anyone. It's just I had FOMO because I thought that the price was gonna go. Okay, that's realistic. Like, that's what happens. Sometimes you see the market being very volatile, and that's what happens. Okay, so I had a 20 pip stop loss. I had 1 to 2 risk to reward, but my stop loss was literally triggered by 2 pips, and that's the reality. My analysis was correct. It's just that in the heat of the moment, that's the mistake that I've done, and that's the reason why I had less gains than possible. But the logic was still the same. Okay, so the logic was that a massive FVG was printed. Now I saw that there was a massive fair value gap here as well, so there was a big imbalance of trades over here. So that means that this has to get filled at some point. Okay, because fair value gaps always get filled, so this one will get filled as well, and more than likely it's probably gonna get filled today. So what was my target? Target realistically would have been the 50% of the previous range, and as you can see, the moment it came, okay, so right now is essentially 130. Okay, so you can see the moment it came to 50% of the previous range, it started to consolidate again, and the whole thing starts again and again and again and again. So now you can expect to be buy side sweeps and sell side sweeps. Okay, so this one has sell side swept, and now it's going to probably target this way. So whoever sold at this level is probably targeting this FVG, so they're looking for a big trade. Okay, and that was the logic of my trade. So I made 343, but I lost 200. But because of risk management, I was able to still come on top. And this is what I will always preach to you guys. Always have proper risk to reward. And if you would like to know how this concept can help you in your own manual trading, then please text us, message us, DM us, and we would be more than happy to explain to you how this works. Thank you.